I watched 30 hours of support and resistance so that you do not have to. What is up, traders? My name is Fernando, and in this video I'll be teaching you how to trade using support and resistance, and I'll be breaking it down for you to the T, right? So what makes this a great strategy and a strategy that I recommend to a lot of my students is that it's very simple and efficient, right? Especially for a beginner. Whether you're a beginner, an amateur, or a professional trader, I would still recommend this strategy because it's very effective, of course, if executed in the right way, right? So without further ado, let's get into it. So as you guys can see right here, we have ourselves the Euro United States currency pair, right? So going into technical analysis, the first thing that you should do is identify the trend. So as you guys can see, this is a downtrend, right? So that's the first thing that you identify. And secondly, to make it easier for you to trade and find your support and resistance areas, is for you to set up your trend lines, right? This is really important when using support and resistance. So we're just gonna put this trend line right here. So setting up these trend lines will make it possible for us to know where our channel of trading is, right? And then this is, sorry, let's do this. So almost all of the times, your channel will be parallel, right? The trend lines will be parallel. That's when you know you have a channel, right? So for you to have a channel, price has to at least touch either of the trend lines twice. So as you guys can see, price touched this trend line once, came again, touched it for the second time, right? So before you even think about taking any trades, the second thing that you have to identify is your support and resistance areas. So the first support area that you would have would be, let me just use the rectangle, would be right here. This would serve as your support, right? So, sorry, excuse me. This is your support for a few reasons, right? So first of all, what is support? Support is the area where price bounces off and goes for a buy, right? So as you guys can see right here, price sold. When it got to this area, it failed to break below, and instead it bought. It went for a buy. The market went for a buy for a long, and then fell down again, and then when it got here, it failed to break below once again. Instead, it went and bought, right? So already at this point, we know that, okay, now this is our support. This serves as our support. Coming to resistance. So what is resistance? Resistance is the area where price fails to break above. So it's the area where price cannot buy beyond, right? So as you guys can see, price bought, and then when it came here, we got some sort of resistance, right? Price could not break above. Instead, it just came down, fell, gave it a second attempt to buy above, but still couldn't. Came again for the third time, still couldn't buy. So at this point, we knew that this is our resistance area because price is failing to break this area. It's failing to buy beyond this area. So that's how we know that that's our resistance area. And this is our support. Just to remind you, this is our support because price is failing to break below. So price bounced off here, eventually broke below. So usually what happens is that price will usually either break support or resistance in some cases, but like in this case, it will usually break support, right? And then in most cases it will retest to fill up liquidity, right? So I usually advise my students to, instead of just like getting in this trade and just like going for the sell because we broke below, I usually advise them to wait for that retest, because that increases the probability of you being profitable or taking a profitable trade. Because let's say, for example, you enter too early. Let's do this. Let's say let's say you saw this breakout, right? And you decided to enter, let's say around here, and you placed your stop loss at the previous high, which would be smart. Let's say this is the trade that you entered and your take profit was somewhere around here. Now you would have suffered because you did not wait for that retest. Instead, you entered too early. Now you would have been kicked out when price came to this area. You see, the banks would have swooped you out of the trade. Just like that, you would have been out, only for price to continue selling after that. It hurts. I know it hurts. I'm pretty sure some of you guys have experienced that, but it's fine. I'll teach you how to avoid that. So what you want to do is to wait for price to test the area of resistance again. And don't get me wrong, in some cases price won't retest. It will just continue selling, right? But in most cases it will. So rather stay safe than sorry. Patience. This is why you really need patience as a trader. So ideally you would want to wait for price to get to this area around here. So I would have entered as soon as I got this bearish candle right here, because it went into this area of resistance and then closed on a bearish. So I would have basically entered around here. And then what you want to do, what's smarter, is to place your stop loss literally just a little bit above your resistance area, because sometimes price will break above this resistance just to trick you into thinking that you should be buying, only for price to fall back down, as you guys see it did right here. So usually most of the time you should actually practice putting your stop loss, adding a few more pips just above your resistance area, because if you just place it directly above your resistance area, then you have a good chance of being kicked out the trade, as you would have been kicked out if you entered this trade right here. So ideally I would place my stop loss around about here, right? And then I would have let the market play itself out. So if I entered here, the market would have obviously, as you guys can see, played around, and then let's see how it would have continued going forward. So before we continue, actually, it's really important that when you take trades, especially when you don't have a lower low to reference to, it's really important that whatever you risk, you make sure, let's say for example you're risking 100 pips. Let's say your stop loss is risking you 100 pips. Make sure that your take profit is at least 200 pips or more. The reason being is that this gives you a good leverage to the markets. And that means that you do not even need to be 60% accurate. You don't need to be 80% accurate, 90% accurate, or even 60% accurate. As long as you're 50% accurate, at the end of the day, you will still make profit if you win at least 50% of your trades. So for example, let's say you have 10 trades that you took 10 trades, right? and out of that 10 trades, you only won 50% of the trades. That means that you will still, at the end of the day, be profitable. You will still be profitable at the end of the day, because every time you lost money, you only lost 100 pips. But when you made money, you made 200 pips or even more. You made double or even more, triple. Usually, I set my ratio to 1 to 3, right? That means that I make 3 times what I would have lost if I lost money. And that's the best thing that you could ever do for yourselves, guys. No matter how good your mindset is and how good you are psychologically and prepared you are psychologically, if you do not have proper risk management, you will never win this industry. So let's see how this trade would have played out, because this is where I entered, right? Hypothetically, let's see how it would have played out. I would have been in profit already. So at this point, let me just pause. At this point, what I normally do is that I adjust my stop loss to break even. So what this means is that I place my stop loss where I entered the trade. This is one of the smartest things you could ever do, because this means that even if market, or let me say the price, changes direction and now goes for a buy, goes for a long position, I'll still be safe. I'll break even. Means that I don't make any money, I don't lose any money, I just break even. So by now I would have placed my stop loss at break even. Let's see what would have happened. And guys, remember, it takes patience. You really have to be patient with the market for you to prevail. Boom. Just like that, my take profit would have been hit. Just like that, my take profit would have been hit. So now at this point, we're still, as you guys can see, price is still trapped in our channel. Remember, our channel is when we have price trapped between 2 trend lines, right? That's when we have a channel. So everything here that you see is the channel. So now usually what I like doing is that I wait for the market to come again and touch this trend line and continue selling, and then I capitalize on the sell again. So let's see how this would have played out, because usually the market will, let me say 85% of the time, right? The market will, rather price will touch the trend line at least 3 times before it breaks out. So at this point, I know that there's still a good chance of the market continuing to sell. So let's see how this would have played out. Remember, right now at this point, we're looking for sells, right? We're looking for sells. Let's see. Come on. Let me just stretch out this. Let me stretch out this trend line so that we can actually see if price touches it. So also remember, right, the trend line also serves as resistance, right? Because every time every time price touches the trend line, it cannot break above the trend line, as you guys have seen here, too. So this trend line is also serving as our resistance. So right here, this is where I will start, monitoring the market and waiting for that bearish candle to confirm that price is not gonna break above this resistance being our trend line. So let's see. Boom. This, you see this candle right here, because we want that strong bearish candle. So you see this candle right here, that is the candle that would have been my confirmation candle. If this was in real time, that would have been my confirmation candle that, we're going for sells. We can go in for our sell. So this is what I would have done, right? Okay, so after getting this strong bearish candle right here, I would have entered. And what you want to do is to place your stop loss just right above your previous high, right? This area right here being your previous high. So that's where you would want to place your stop loss. And remember, guys, once again, you want your take profit to at least be twice the amount that you would be losing here if you were to lose. So if this is 100 pips, this should at least, your take profit should at least be 200 pips, right? So yeah, and for further confirmation, actually, what I also do most of the times is I go to a lower time frame, like let's say the 1 hour, and then I just make sure that everything that I'm seeing on the 4 hour is panning out on the 1 hour, right? So let's just wait for this to load. My computer is being a bit slow today. I honestly do not know if it's because of, if it's the internet or if it's my computer, if it's my storage. I honestly do not know, but here we go. Where are my trend lines? Okay, but either way, it's still fine. I can still explain what I want to explain. So as you guys can see, right here, we have this bearish candle. Wait. Oh my God, no. I don't know why it does that, but it's fine. You know what? Let me just do this. We were here. We were around about here. Okay, so what you would want to do before you enter this trade. So after I got this would have told me that we continue to buy, right? So what you normally should do is go to the 1 hour, right? As you guys can see, I tried and I cannot do it because I think it's because it's not in real time. So what you would want to do is go to the 1 hour or the 30 minutes or even lower and wait for such a strong bearish candle, right? As soon as you also get that on the 1 hour, especially, then you can enter. So this is where we would enter, and let's see how it would play out. And a lot of traders would have been out here because they'd be like, oh, it's going for a buy, but then boom, the market surprises you. We're still in the trade. boom, take profit smashed. See, just like that, our take profit would have been smashed, and we would have now made profit twice in the same channel. We would have milked this market twice. And guys, bear in mind, this is the 4 hour, right? So you can literally apply the exact everything that I'm teaching you right now. You can apply it on the 1 hour time frame and just use the 30 minutes or the 15-minute time frame as confirmation. If you're using the 4 hour, you use the 1 hour as confirmation, or the 30 minutes. If you're using the 1 hour time frame as for your analysis, then you use the 30 minutes or even the 15 minutes, which I think is best, the 15 minutes time frame as confirmation. So let's just take it back here again. Let's just take it back to this area actually. Okay, let's just do this. So you see right here, this was our resistance area, right? So we could have just done this, if that makes it easy for you guys to understand. Could have just placed your stop loss, your resistance area right here. Then you'll see this was your resistance area. This trend line was your resistance area, because you see it bounced off here. And often you'll see, especially when the market, when price touches the trend line for the third time, it's literally almost every time it's the third time. So this was the first time price touched the trend line, and this was the second time, and then this was the third time, right? So usually on the third time, price will kind of like pretend like it's about to buy only for it to sell again. So basically these are the huge banks trying to sweep out people that are going long, right? They are trying to trick you into thinking that price is now breaking out and going for a buy, only for price to fall and your stop loss to be hit if you were going long, right? So whenever you go for a short, as long as you did proper technical analysis and you trust it, you should just stick to your plan, because a lot of people who were selling would have like gotten scared and thought, okay, that the market is buying, and entered buys instead, only for the market to fall down, and then their stop losses would have been hit instantly. And that's how these huge banks make money from traders and retail traders, all sorts of traders actually. So this is how you use support and resistance. Alright guys, we've now reached the end of the video. If you learned something new and found this video to be beneficial, please subscribe and hit the notification bell and be tuned for the next video that I drop. I appreciate you guys.